What the hell's going on, guys? It is the end of June 2017, and so I wanted to make a video today. It's been about a week since I made another video, and I had a choice between two. So during lunch today, me and a couple of my coworkers were just shooting back and forth the difference between traditional IRAs and Roth IRAs, and I'm a big proponent of Roth IRAs because I'm starting so young, and I'd rather pay my taxes now. And but anyway, so I was thinking about how I'd go about making that video, and I really thought about what else I could show you guys, and I thought about, well, there's this new platform called Fundrise, and there's a couple other ones called Real Estate Tycoon or something like that. And I figured instead of talking about traditional IRAs and Roth IRAs, I'd talk to you guys about this. So hopefully you guys like it. Fundrise is basically just a crowd fund or crowd uh, real estate investment trust where essentially you give them money, they take your money, they pool your money, and they ramp up and purchase assets on your behalf. And then they basically manage that asset and basically either pay you a dividend or hope that it appreciates in value. So as you guys can tell, you can go to fundrise.com to learn a little bit more. But this is basically what it looks like if you're not signed in. They have a really nice, pretty graphs, and I'll have to say the user interface of Fundrise is really awesome. But the only real reason why you'd get on Fundrise is if you're, one, either seeking dividend income, or two, you want to invest in real estate, and you kind of want to be more involved, but not 100% involved plunging toilets. You know what I mean? So it's kind of a nice in between because it's not as hands off as buying a stock, on the New York Stock Exchange and a real estate investment trust that way, but it's not to the point where you have to go and unclog toilets. So it's pretty sweet. So they have a bunch of different portfolios. I'll show you guys a little bit more about what I'm invested in. But you can kind of think about it in three different ways. Do you want income now? Do you want less income now and more long-term growth of capital, or do you want a mixture of both? So just for instance, this is kind of the things that they might show you. If you're thinking about investing with them, if you're just 5 years, 25 years. So investing, let's say $25,000 with them over 25 years, they're going to say you're going to get 10 to 11% per year, and of which, some of that is income and some of that's appreciation. Now, it changes, and, your different assets, which are, down here, change depending on if you're doing supplemental income or balanced or long-term growth. I think if you do long-term growth, I believe it changes to more stuff in like LA and potentially Washington area. Washington meaning like the DC area, I think. Maybe not. But if you change more towards income, your portfolio growth won't be as big, but your income is a couple percent higher. And so that's will invest more in like loans, long-term loans, construction loans, um, D-class apartment complexes, whatnot. So basically, what it's trying to show you is that these A-class are going to be, lower risk, lower return, but they're also lower risk. And then you get to like these D's and C's, which are going to be higher risk but also higher reward. So that's kind of something you need to keep in mind. So that's kind of like what it is, and you can kind of go into each one of these. It's kind of cool. You can go into each one of these and look. Let's just take this for instance. It's an acquisition loan, but you can kind of go into here and say, okay, well, what is it for? And it's essentially a loan, and it's part of the income E-REIT, which I'll show you guys a little bit more about that. But basically, they're giving out a loan to this type of person and from Denver, Colorado, and essentially it'll be a loan to be able to acquire something in downtown Los Angeles Arts District, right? And so they're saying your loan to value ratio 75%, yada yada yada, and you can get more involved in kind of seeing where it is and and actually looking at the documents that they underwrite and everything like that. So I actually have a whole $1,000 invested. I was like, screw it, I'm just gonna give it a go, see what happens. So I kind of did. I think I did balanced investing, and so it kind of means I'll get some dividends, and I'll also get some growth appreciation. And so I only invested in like June-ish time frame. So I took my $1,000, and I just started recently, like 2 or 3 days ago, started actually getting some actual cash. And I guess depending on how long ago you joined, you'll get these distributions. I elected to reinvest my distributions, just like a regular real estate investment trust that I invest in the stock market, so that I can amplify my returns, yada yada yada. Um, so you can really look at whatever you wanted to look at, um, and you can see how much of my portfolio is in this apartment complex or that apartment complex. So it's like I have a whole $48 that are invested in this Arlington, Virginia apartment complex, which is kind of sweet. But there's totally different items that you can look at, right? You have East Coast REIT, your Heartland, which is like more of like your Middle America growth, income, West, Washington D.C., Los Angeles. Um, so it's pretty interesting, and I can't. I've only been invested since June 3rd. You'll see here a whole $142 in each one of these. Um, but what you'll notice is uh, oh, yeah, you can see some more stuff is coming in over time. Oh, this will be pretty cool. This is still new to me too as well. So apologize if I'm still trying to, if it doesn't seem exactly polished, because it's not 100%. But anyway, so another thing that they do is they send you emails a lot about different things that are happening. So of course throughout time they'll ramp up different strategies and different um, analyses and whatnot to show you guys, things that they're adding to the portfolio as more money gets poured in. So you'll see that they added, $2.5 million investment in Tempe to purchase a studio something or other. Essentially to purchase into a 239, unit multi-complex. So pretty sweet, right? I mean, they're continually showing you, everything that they're investing in and keeping you guys updated. So obviously this comes with some costs, right? So just for the fact that you're investing with these guys, they're going to charge you 0.15 annually. So in comparison, if you'd use Vanguard or something like that, you'd probably get charged around this, maybe a little bit more for their REIT, ETF. And then obviously they're also charging you about 0.85% for asset management. But there is some criteria around here as well. Like, what do they say? Sometimes they say if we don't meet certain criteria, like if we don't make 10% a year or something like that, we're voiding this 0.85%. And you can read more up on that on the 9. But for private equity, real estate investment trusts, you can anticipate that you're going to have a lot higher of a commission fee because it's not publicly traded and whatnot. So this is kind of cool. It just runs you through everything. I don't think that this is really something that I would do or really take too much mind of. Like I said, this is probably more so where I would concentrate in. But basically, what it's saying is it's being able to purchase things up front for you, and you're paying basically what it costs to get into the things, rather than what other REITs do, which is essentially just purchase things and then you kind of have to pay an inflated price for them and yada yada. So just kind of wanted to walk you guys through one or two of the things that I have. So showed you on the last page I have an income e-REIT which essentially pays me dividends for just investing in it. So you can see since the middle of last month I have a whole 32 cents that I've made in dividends. Actually, it was June 13th, I think, that I initiated this. So pretty cool. You can see all the different investments that I have, where they are, what they are, what type of asset they are and where they are located, as well as what type of investment it is, whether it's a construction loan or whether it's an apartment complex. So in that respect, it's pretty cool. And then, with that, you can see what kind of documents come with that. So what are you basically signing up for? Let's go back to the income. So what you're signing up for, the agreements, the risks, and you can kind of see, the costs that are behind all these items and whatnot. So um, that's pretty sweet. But in terms of overall performance, this started not too long ago. I think it was kicked off in like 2012 or something like that. But what it's basically show, of course, it's going to try to show you, oh, we're better than bonds, we're better than real estate, this and that. But what I think I would take into account is it's something fun. I would keep it in mind. I have $1,000 invested in it. My other coworker, who actually turned me on to it, had $2,000 in it. He's like, dude, I got paid. He's like, might be a scam, but let's figure it out. Let's check it out. I was like, okay. I was like, worst case scenario, it's a scam. I drop in $1,000 and figure out it's not something I use, or I was like, in this case, I end up getting paid and it ends up being pretty cool. Anyway, I looked online, a lot of great reviews associated with this on Google. Yeah, and it seems like Fundrise is really one of the main ones that you don't have to be an accredited investor to invest in. So things like realty shares, and there's a couple of sites like this that are very similar. They're like crowdsourcing, real estate investment trusts, but at the end of the day, you have to be an accredited investor to invest. And so, if you're not an accredited investor, which for those of you who don't know, it's someone that makes like $200,000 a year over the past 2 years and has $1 million in capital, not inclusive of your home, then you can't invest, right? And so you're stuck to doing stocks, bonds, what have you. But investing in something like this, which is a little bit unconventional, but at the same time seems kind of cool. You know, anyway, figured I'd give it a try. Seems to be working well for me so far. They have great pictures. They have great presentation on the website. Great user interface. They have plenty of articles talking about them. Across Forbes, New York Times. You can see here, CNN, NBC, all that crap. So I just thought it was really cool. It also pays a pretty decent dividend, and basically that was something I wanted to talk about. There is something that you should know, though, is that this is something for someone that is extremely long focused in investing in real estate. So if you want something that's very liquid, this isn't something for you. I think within the first 90 days, if you buy, you can get your money back with 100%, no issues. But I think after that, I think you're limited to 95%. Then after every year, up to 5 years, so essentially 2 years in, you can get 96% of your original, of the share price, I should say. Sorry, not your original investment, of the share price. So let's say, 95% of, what the current, net asset value of it is. You buy it at $9.85. It jumps up to $10.20. You'd only be able to get 95 cents of that. To the point where after 5 years, you're able to purchase and sell, or you're able to sell all your investments at 100% of the net asset value. And that's basically just to encourage you to keep your money involved, as well as to build these things. It takes a lot of time and resource. And so being able to try to continue to add additional flexibility into the funds throughout time, it's going to be difficult if people are buying and selling a lot. All right. So talking about actual assets and investing with the company, not purchasing other shares from other people, right? So hopefully that makes sense to you guys, and I would just do some research if you were to think about investing with these guys. Anyway, I really hope you guys enjoyed the video. Feel free to like, subscribe the channel and the video, and give me some comments down below. Otherwise, I'll talk to you guys soon. Let me know if you have any other video ideas that you have in the future. Hope you guys have a great weekend, and have a good one.